Okay, so then let's try another one. Let's go to the open the last 365 days just to take a look at the difference between the forms, print preview. Note that these statements are only giving us those invoices that still have an outstanding balance, a balance that has not yet been paid, making them a little bit more simplified, a little bit easier to read. However, not providing as much detail, not giving us as clear a story. So whether that would be good or bad will basically depend on the complexity of our system. In other words, the prior statements we looked at gave us kind of the beginning balance, which was the activity before the beginning date range. And then it gave us a summary detail of the increases to accounts receivable, that being the invoices, the amounts that they would have to pay us on, and the decreases, the payments that we have received. And it gave us kind of a running balance of that activity. Now, that can be a little bit more complex, but it gives us a nice story about what is happening, whereas here, we're just going to have the invoices that still have an outstanding balance to them. Now, why would that story scenario, that more detailed scenario, be better in some situations? Because sometimes you might not have invoices that are be paid in full, especially if you're in like a job cost type of system. It's quite common in those cases where people are going to send you partial payments for the invoices. So in that case, then you want to usually kind of tell a story and say, hey, this is what's happened. We had this invoice that went out, and then you had a payment, and then we had maybe another invoice, then we had a payment, but the invoice has not been fully paid. And that'll possibly make it a little bit easier for them to piece out what is actually happening, which work that they're paying for basically, in the future. Remembering that when we receive a payment, if there are multiple invoices outstanding, we will apply that payment to a particular invoice, right? And usually we're going to apply it to the older invoice. So if they give us a payment, we apply it to the older invoice until that's been paid off, and so on and so forth, which would be typically the case. Now, if you're in a system where usually people pay you in full for the invoice and you don't have that scenario of partial payments, it might be a little bit easier to just say, hey, look, these are the outstanding invoices that you have not paid us on, instead of giving the activity of the increases and decreases. So whether you choose one of these two statements might depend on that, how simplified you want your statements to be, based on whether you have like a job cost system or not, where partial payments are involved. So you can see here we just have the invoice, just listing out the invoice that has the outstanding balance. Now remember that if it lists out an invoice that has a balance that's due, does not mean that that was the amount that was billed or sent out in the original invoice, because they might have already paid us a partial payment on the invoice. That's part of the point that I'm trying to make, that when you would want to have this statement versus the prior statement. All right.